from the Crypt.
What is up, freaks? Welcome back to Tales from the Crypt. It's your boy Marty Bent, back here on another Friday night at the Barstool Sports Studios.
As a full-time employee now, Marty Bent.
Thank you, Lou. Thank you, Lou. I wasn't going to make that announcement, but I guess, hey, yeah, full-time here. Resident crypto degen, and helping out on the account team as well, you know, trying to sling ads while we can. But yeah, I'm very excited about today's episode for a couple of reasons. The main one being that this is our first non-Bitcoin maximalist we've had in the studio, which I've had a bunch of people reaching out to me saying, all right, we need to get a different perspective. And I'm very happy that we're going to get that perspective tonight. I'd like to introduce you all to Arjun Balaji. Arjun, welcome to the podcast.
I'm happy to be here.
Well, thank you for coming. Just a little backstory here. Arjun and I met probably in August of last year, right before the massive run-up that we witnessed over the last 6 months, or not even 6 months, 4 months. It feels like it's been 2 years.
That's 10 crypto years. Right
Exactly. So a lot has changed. We've got a lot to catch up on. As you all know by now, Lou's in the studio with us, and we got Nate hanging in the corner. He's over here trying to learn a little bit more.
Just trying to learn about alts today, just really trying to take it all in and, you know, just pick this guy's brain a bit.
Yeah, so I think the best place to start, this is Tales from the Crypt. The one question we have to cover first is, how'd you find Bitcoin? When did you find Bitcoin? And what drew you towards it?
For sure. So it's actually a little bit of a... I was a little bit of a degen back in the day. That's how I found Bitcoin. This was 2012. It was my freshman year of college. And, back, underage drinking, everybody is looking for, and I don't condone any of these behaviors, but, everybody's looking for access to alcohol. Back then, there was a guy on an illicit market, Silk Road, selling legitimate Ohio state IDs. And... I went to school in Boston, and, one of the things we didn't realize is it's weird if you roll up to a bar with your crew and everybody has an Ohio ID. But everybody on my floor was interested in getting one of these Ohio IDs, and, I was the kind of resident computer science major who was tasked with looking this stuff up, and, that's how, I ended up stumbling on Bitcoin.
The Silk Road, it drew a lot of people to Bitcoin. Rest in peace, and free Ross.
Free Ross.
Ross Ulbricht's still sitting in a jail cell on
Although if he did order a hit on someone, that's I don't know how I feel about that.
Yeah. That's the touchy part with Ross. He may or may not have tried to have somebody killed. That's a scumbag move. But the double life sentence because of creating the Silk Road is I think that's a little unjust, a little cruel and unusual punishment in the long run.
Yeah, a single life sentence.
Mm-hmm.
That would have been enough.
Yeah.
I think that's enough.
Yeah. You don't have to put him in there for 2 lives. So the reason I brought you in, you're, as a lot of my listeners and readers know from the newsletter, subscribe. I'm what you would refer to as a Bitcoin maximalist. I know you trend maybe towards maximalism, but you're not afraid of alts. You're not afraid of the alt markets. When did you start messing around with alts?
Sure. I went through phases, I think, that everybody goes through where, first I found Bitcoin. Bitcoin was cheap. I bought a lot of Bitcoin. I was very, just fascinated with, and I went down the whole rabbit hole of, ANCAP, anarcho-capitalism, found, Mises's work, went down that rabbit hole, and then eventually my sort of goal was, wait a minute, there could be things out there better than Bitcoin. Mm-hmm. And I was in that slightly disillusioned phase. And so I messed around with that whole sort of like first run of altcoins in 2013 with, Litecoin, and, some of them still exist, but...
Remember...
Yeah.
Archcoin, Zetacoin,
Aurora
So,
Coin.
Can I ask a question? It's time for me to jump in. So 2013, I think I was still starting to do Barstool stuff. Marty's always like, you're going to get wrecked in the altcoin world. But to me, 2013 is a different world than what we're living in now. why do you feel like? Do you feel that like now these altcoins are more here to stay than they were in 2013? Like obviously they're all not going to make it. If this is the new internet, they're all not going to make it. But is it like different than it was in 2013?
It is. Yes and no. So what you saw in 2013 when the market started to draw down significantly, with some of the altcoins markets, you'd see there just weren't enough bids. There weren't anyone buying up this stuff. And, they saw them dip lower and lower and lower, and some disillusioned guys would start buying the dip until they realized, there was just no buyers left. And so they ended up, their investments became bags. They just ended up becoming bag holders. And, I think it's, play stupid games, win stupid prizes. I think I feel the same way about, alts right now, where I think a number of them, the market's significantly more mature now. I think some of them are here to stay. And can be thought of as investments over a multi-year time horizon. But I think, we'll see the same thing with, the overwhelming majority of the alt market drawing down significantly.
Yeah, and it's the old saying, history doesn't repeat itself, it rhymes. And what we've seen this year, last year with the ICO explosion, reminds me a lot of in 2013, 2014, the pre-mined altcoins. That's basically what we're seeing, just a new iteration of that.
Yeah, and so people talk about how, all these ICOs are so scammy and how, there's all these pre-mines now. Dude, Bitcoin talk forums back in the day, 2013, those were the days of pre-mines.
Mm-hmm.
Guys would pre-mine tokens, they'd launch them, and then they'd steal lots of 50 Bitcoin, 100 Bitcoin, 500 Bitcoin, and it was a lot worse then than it is now. At least now there's a lot more eyeballs.
Mm-hmm.
That's for sure.
Yeah, and so I think one thing that a question I've been getting a lot recently is people get confused, and so within the alt world, there's different types of alts. So there's coins that have taken Bitcoin's source code, tweaked it a little bit, and launched a new Genesis block. Obviously, the most recent iteration has been forked coins, and then we have completely separate protocols that have been started from scratch.
Yeah.
So can you help us give a little color and sort of the differences of each? And
Yeah, sure. I think about tokens as, what is their intended purpose, right? So, I think you have a number of these tokens that are competing for, what I would call the money use case, right? So store of value, a payment rail, and some of these tokens have distinguishing features. Others are just trying to be, Bitcoin. So you have tokens that fall into that camp. Mm-hmm. Then you have, what I would describe as protocols. You have tokens like Ethereum, where they're attempting to build what they see as a protocol for, call it programmable money. Mm-hmm. Where they may or may not necessarily be competing with Bitcoin, despite how maximalists sometimes view it. But the founders have, definitely a different intended use case. And then you have a whole host of tokens that are built on other protocols. You have a lot of, what people call utility tokens that are built on top of Ethereum that, try to serve some sort of purpose. And then lastly, I would put, the rest of, tokens into a bucket that's mostly, useless tokens. You have a lot of tokens that don't need to exist.
That was exactly what I was going to ask, is when you're looking at alts and you're reading about them, what are you looking for to separate the ones that are useful and then the ones that are just absolutely made up fairy tales?
Yeah, that's interesting. The thing that I always think through is what value will accrue back to the token. If I'm a holder of this token, why is it going to go up in price over time other than just other speculators piling into it? And so, if there's a real use case for it, where, it'll need to be used in some sort of network that'll cause people to hold the token, causing the price to go up, then, it might make sense as an investment. So that's one of the big things that I look for is, what value is going to accrue back to the token.
And so to follow up on that, do you kind of separate alts into two different buckets? One, to hold for a long time, and then the reason that the reason I got into alts is because it looked like a great way to make quick money, just really quick, just the whole pump and dump thing. So do you look at two alts? You're
going to get
realistically,
wrecked. You're going to get wrecked, dude.
So, but do you look at them two different ways? These are good to hold and these are good for right now, but not long term.
Yeah. So I have, there's, we were talking about this before we hit record, but, if in terms of what I would hold for a really long time, it's called 5 years or 10 years, there's only 2 tokens that I would hold. That's for me, that's Bitcoin and Monero. Everything else, I have a different sort of time horizon on where I find the thing really interesting for now, but I can see many reasons why that thesis could change over, the next 2 years or 3 years, or even 6 months in some cases. But then there's a lot of tokens where I know the thing is going to go up just because of other speculators, stuff like, we saw Tron, do this crazy run up top.
Oh yeah, I got to ask you about. Sorry, we got Matt Brown, our account manager kid. Like
Lewis has a mini me named
I have
Matt
like a
Brown.
mini me who like runs around, has to do everything I tell him to do.
I'm his adopted uncle.
Yeah, Marty's his adopted uncle. I need a minute on Tron because he will not stop asking me to ask you about Tron.
Tron. Oh God. He probably doesn't want to hear my opinion of Tron.
Well,
No, we need it.
No, we
Tron.
need it. We need it. 'Cause
Tron-
He asked me 100 times today. Just get the opinion on Tron.
Did you hear that they're partnering with Alibaba?
Did you hear that they stole most of the Filecoin white paper?
Yes.
My favorite moment of Tron's short existence, was when, Juan, the founder of Filecoin, tweeted out about Tron, and he said, he specifically pointed out the pages that were straight up plagiarized. And then he said, just in case the PDF gets taken out, I'm going to archive this on Filecoin. And, there's, I think, no better way to wreck
Proving
someone.
a use case.
And, Tron's taken a pretty big hit the last couple days. But, I think that in general, when you're investing in things that have no code written, nothing that you can sort of publicly play around with, where, the use case doesn't make a lot of sense, the team, copied other white papers, I personally try to stay away from that kind of thing.
Matt, if you're listening, when you do listen to this, Tron's out, you're an idiot.
He's planning on bag holding this. I've been trying to
he's
tell
been
him.
trying to talk him off the Tron train for a while.
Tron's also just kind of a ridiculous name. Like, can we just? It's absurd. Like, why would you name your token?
Hey, we're talking about it, so
I mean,
This is another like good segue because Tron, it's promising the world to people, and I feel like the retail investors specifically don't really know how constrained these blockchains are from a scalability standpoint and the functionalities that they have. So let's bring it back to sort of what blockchains work right now. Like what are their purposes and what may be functional in the future.
Sure. I think that inherently blockchains trade off significantly on with convenience versus things like transaction speed. And so one of the things that noobs also always sort of get suckered into is, hey, Bitcoin has, X transactions per second. I don't remember what the exact number is.
I think it's like 3 to 7. I think with Segwit it bumped up to 7 or something that.
But, hey, we have Ripple or some other, hot token that has, X number, X, order of magnitude more transactions per second. Therefore, it must be better. Which is a trap that, token investors often fall into, which, doesn't actually make a lot of sense if you think about, why people buy Bitcoin, what Bitcoin's sort of perceived use case is. And so, oftentimes investors will fall for these, grand narratives of, hey, Ripple is partnering with all these banks, which, I'm not calling a narrative. It might be true, but
no, I mean, the tweets that come out in the last 2 weeks at the bank, like the people working at the bank's coming out and saying, like, yeah, we're never going to use this. Like, we've said we'll work with it a little bit, but
yeah, in some cases, with in the case of IOTA or some of these other tokens, they're promised some sort of crazy new engineering structure. Hey, we'll use a DAG, directly acyclic graph, and it's so much better than a blockchain. This is the future architecture, and what they don't realize is that decentralization, true decentralization, trades off a lot of things, and so that's one of the big sort of red flags to watch out for.
Yeah, and that's what I'm trying to get through to people with the newsletter and this podcast is. Let's remember like the core reason why this technology was created, and that is so people could transact in a way that will never be censored. And there are trade-offs. So if you want that censorship resistance, you need decentralization, and to a certain extent, the blockchain is going to be a little slower. It's going to be a little bit more arduous at the protocol level. and what I'm really excited to see this year, specifically with Lightning, is working on the second layer and opening people's eyes up to a second layer that is much quicker and sort of people figuring out the separation from the protocol level from layers on top of it.
Absolutely. I think that, once the Lightning Network is sort of fully deployed and, I've seen some of the UX, I've played around with it, it's awesome.
Yeah.
And so, once we see that, I think that a lot of people will be less, they'll be more disenchanted with a lot of the altcoins whose sole purpose is just, hey, I can send you money from my wallet in 2 seconds and you'll receive it and you'll be able to see it. But I think that there are differentiating features that make some altcoins interesting. So, privacy is something that I think is very interesting across a couple of projects. I mentioned Monero earlier. I think the two sort of leading candidates, both of whom use different privacy mechanisms, are Bitcoin and Monero. Zcash and Monero. Right now, Zcash uses something called a zero-knowledge proof. Monero uses ring signatures. Both different privacy mechanisms, different teams, different sort of team governance models, and both sort of competing for sort of what is the private money use case? What's the what's going to be used for on darknet markets and things like that.
Yeah, that's what Matt Corallo and I talked a lot about fungibility when he was on here. And again, it's interesting to see what coins are experimenting with that and the different governance models they're pursuing as well. So one thing I like about Monero is that they have planned hard forks, which sort of pushes the issue of, hey, we're going to upgrade, and it's going to be done, which is interesting to see.
For sure. I think that it's also awesome that you have a number of these developers who, nobody really knows who they are, right? It's going to be, I think it makes it that much harder to shut something like that down.
I'm ignorant to this. I always thought that Ricardo started Monero. Who is the anonymous dev that started Monero? Do you know
I'm actually not 100% sure. I know Ricardo is sort of the public face of the project, but I'm not actually sure if who the original dev or sort of founder.
Yeah, that's slipped by me as well over time. But yeah, these private and that's the other thing. Like, yes, you should diversify, but like at the end, like the whole maximalist argument and where I come from is that one day Bitcoin's going to be able to implement iterations of these features onto their blockchain, maybe not at the protocol level, but at maybe there's a lot of arguments coming out that Lightning's gonna help fungibility as well.
Yeah, can you give me some Lightning? Give me some Lightning talk. I'm a big Lightning guy. I watch what's going on, and like I envision this world where like Lightning has all these use cases, but like I'm like, is it really gonna happen though? Or if it does happen, when do you think it happens?
Yeah, so I think that's
sorry, Marty.
No, that's a great question.
That's something that I'm eagerly awaiting. I think that we've had speculation on when it's going to be finally ready for a long time now. First originally delayed by the SegWit upgrade on Bitcoin, and now we're slowly starting to see initial prototypes of how it could work in a real world setting. We could actually send each other transactions now, which is pretty interesting. I think that eventually once that starts being adapted for everyday payments, that'll be kind of interesting. I think that the way that I think about investing in alts, like personally, whatever I think wins the money use case is going to be more valuable than everything else. And I think that store value, a payment mechanism, a means of exchange is still the most interesting thing to me. And so that's why Bitcoin and Monero, for example, remain sort of like top of mind for me. And I think that Lightning Network will prove, if it proves out the way I think a lot of people are expecting, that'll be a significant sort of improvement, for Bitcoin in the eyes of many people who are unable to, sort of transact due to the very high transaction fees.
Yeah, and that's one thing I harp on a lot on this podcast and in the newsletter is that there's so many impatient motherfuckers out there who like literally don't.
I'm right here, man.
Wait, we're allowed to swear?
This is Barstool Sports.
Oh, you got the most impatient motherfucker on the planet sitting across from me.
I'm right here.
Fucking the Baron of Bitcoin. If we're not rich in fucking 6 minutes, it's the end. The entire world's ended. If he's not literally draped in gold like a goddamn pharaoh in the next in the next hour, it's over. The entire thing's over.
I'm jittery. I'm jittery about it.
But that's the one thing like that. It does piss me off. I get pissed off because like the Bcash people and everybody
Bitcoin
else.
Cash.
Bitcoin Cash. Arjun just gave me the finger. But it's like, this is a brand new alien technology. It's going to take time to build out. Have some motherfucking patience. Like, this isn't going to happen overnight. And that's why I'm a big slow and steady. Keep it simple, stupid, slow and steady, build brick by brick. That's how this company was built.
Exactly. No, I mean, even if you were to invest in alts, it would have to require a lot of discipline, portfolio management, sort of position sizing, I'll call it. You don't want to be too overexposed to stuff that's basically a prototype or stuff that you're not sure of.
So then what's your blockfolio like breakdown? Like, I'm 85% Bitcoin, 15% in crazy shit. And like, I don't know, and I guess that's my big question is that, like, you obviously know a lot more than me. Like, I have my team is Bitcoin Marty and a 20-year-old kid. So like, I have a lot of work to do all day long. So like, for the people who want it, like, I know this is very important, and like, I try and do as much time, like, spend as much time learning about it as possible. Mm-hmm. But I'm not like, I don't have all the time in the world. Like, you're like in this space.
Yeah.
You're in it. Like, there's no financial advisors for this at the moment. So like, how do we like, and I don't think I'd ever trust a financial advisor anyway. Like, what is the easiest way for the people that are busy but do have capital to like, and that's way off of my other question, but we can get back to the blockfolio question.
Yeah. I think that, the easiest way for people to get exposure to something that's not Bitcoin is obviously, going on Coinbase or Gemini or whatever exchange you feel comfortable with. Now you have a couple of options. You have Bitcoin, you have Ethereum, and you have Litecoin. So sort of picking something like a 70-20-10 allocation, maybe. Something like that. This isn't. By the way, I should probably put out a disclaimer.
Not financial.
No
advice.
financial advice is given.
No financial advice.
I'm going to do exactly what you say. So
we are not your financial advisor.
We are no financial advice ever. If you're taking financial advice from this company, you got a lot of issues.
I've been buying up a lot of pizza.
A lot of pizza.
So I think that's the easiest way. In terms of my personal blockfolio, I would say, depends on the day, but, somewhere between 60 and 70% in Bitcoin and other forks. So Bitcoin Cash, Bitcoin Gold, Bitcoin
Platinum, Diamond.
Yeah, I don't even know how many forks there
Rhett
are.
Creighton's about to launch Bitcoin Private.
Let's get you in some forks.
So
let's make sure we grab some forks after this. You owe me some.
You
forks.
have all the forks.
I don't think I do.
They're on your Trezor. If you have Bitcoin or Trezor, they're there.
All my Bitcoin's on my Trezor.
Actually, you don't use a Trezor. You use a Ledger.
If Bitcoin's on your Coinbase, then Coinbase has all your forks. So just shoot them a very, very angry email.
Oh yes, that. So let's get into that. So that's one thing. Not Coinbase specifically, but like the nature of this technology, like it was made to be peer-to-peer, decentralized, and a lot of people are holding their decentralized currency on centralized exchanges. What are your thoughts on like the ethos of the space? And would you encourage people to educate themselves on how to manage their own private keys, or do you think it's too risky right now from a UX perspective?
No. So I think that I want, I personally want, I have like the sort of like crazy out there, everybody's an individual and, everybody manages their private keys. I have that vision of the future.
I do as well.
I think that Bitcoin is like, will turn into sort of like, the way that we interact with Bitcoin, not, we as in this room, but, people generally, I think, will interact with Bitcoin like they do with like the early internet protocols, right? Mm-hmm. So if you take SMTP, it's a good example. SMTP is the email protocol on the web. People don't, run their own email servers. People interact with, Gmail and, Hotmail and Outlook and, a number of these other sort of centralized providers. I think that most people interact with Bitcoin or Ethereum or sort of these decentralized protocols the same way, where they'll hold their tokens on Coinbase or Gemini or Zappo or some other custodian because they want exposure to it and they want to interact with it and they want to transact in it potentially and move it around, but it'll be optionally decentralized for all the people who actually really need that and care about that. The same way you can run your own email server, you'll be able to run your own full node.
I love that. So the people that want to cross borders and need to sort of know that their wealth is stored securely in their possession.
Yeah,
if they want to. So they had the option.
Exactly. I mean, Mnuchin, he had a whole statement today where he was like, "I hate Bitcoin," something like that. He was like, "I hate Bitcoin because Bitcoin is, Swiss. It's like a Swiss bank." And yeah, thanks, dude. It's exactly what it is. It's a Swiss bank in your pocket, right?
Yeah, Michael Goldstein was joking. Like he was asking all the wallet providers telling them that they had to go through KYC AML, and he didn't realize it's open source software, and you'd be KYC AMLing yourself, like if it were to play out that way.
Yeah, no, I think that people who are advertising Bitcoin should use him as a testimonial. They should say Bitcoin is a Swiss bank, and you can use it to as an uncensorable stored value. I think that that's awesome. I think for people who need to do that because they've suffered, from hyperinflation or they don't trust their own government's money. I think that they'll always have that option. And for people who just want to, sort of like move money over borders and not worry about that, they'll have that option too. But for the overwhelming majority of the people, it's an asset like anything else, and they'll hold it like they hold gold. People nowadays, at least my generation, they don't buy gold; they buy the GLD ETF.
Yeah, and now digital gold.
Exactly.
Yeah. So one thing I want to touch on is I want to get your opinion. Where are we right now in the mania phase? Like this wave of mania, because I remember like 2013, 2014, that wave before Mt. Gox, that was big. And that's the thing about the space. It comes in waves. So like the first one was probably like 2011 when Slashdot wrote about it, and then it went from like 10 cents to $1. That brought a wave. There was a crash. People leave. Then 2013, people come in, Mt. Gox falls. That wave was a little bit bigger, and now the wave that we're currently engulfed in is massive. You got CNBC tweeting about it, talking about shit coins every day.
Shout out BK for putting Poloniex on CNBC.
Oh my god,
that was
Brian
absurd.
I'm surprised he didn't try to pump Nautilus coin again.
Yeah, he pumped Stellar yesterday.
No,
it was a little bit cringy.
So so let's compare this wave. This mania wave to prior ones, previous waves. I mean, because this is like you're like being in Bitcoin for so many years. You always like imagine like long term everybody's going to get into it, but like when it starts to finally happen, it's like holy shit! Like I didn't feel like it was going to play out like this, or it's not predictable at all.
Yeah, it's a little surreal. Right? I think that the thing, I was having a conversation with a friend who's been 4-year investor in crypto assets. That also comes from sort of traditional finance background, and he and I had the conversation. It was surreal. We both sort of in our minds expected that this would happen, but now that it's happening, it feels it's like, what the hell is going on?
Yeah, I'm like trying to grab onto something to like catch my bearings. And
yeah, exactly. So one thing that's been interesting about this run up the last year is that we've had a lot of these like sort of mini crashes. We'll call it like 30-40% drawdowns.
Yeah, there was like 30% corrections last year.
Yeah. So Jamie Dimon and China, and now South Korea is the new China when it comes to banning Bitcoin. And so we've been having
real quick. Fuck Warren Buffett. Fuck that guy. If that old ass man died today, I'd be happy. Fuck him.
Wow.
Nate just coming in with the side commentary.
I forgot how much I hated him until you just started mentioning Jamie Dimon. Like Warren Buffett's old ass going on TV being like, Bitcoin, fuck you, old dude.
The Baron of Bitcoin coming at the Oracle of Omaha.
Well,
I love it.
He's coming at me. He's trying to hurt my fucking bottom line.
Emotional. You're too emotional.
No. So Nate, he's saying Warren Buffett's going on TV.
Don't try to talk rationally about him. Just fuck that guy. We can move on. Sorry, but fuck that
Let's
guy.
talk rationally about him.
So he's going on TV. He's saying, I think most of what's out there is going to zero over, say, call it 5 years.
Yeah, he said he put a 5-year put on it.
Yeah, 5-year put. Would we buy the same 5-year put, like going out and like looking at what all of the dog shit that's out there right now?
I probably would.
Yeah, exactly.
So okay, yeah.
But what he said was, he's like, I can't have a position on something I don't understand, but then he's talking about it as if he understands it. So he just completely contradicts himself in his position on it. Like, just don't talk about it then, Warren Buffett.
Yeah, no, I think that he's the other thing is with all these media personalities, they always want to get the soundbite. They just want the story. So it is what it is. I think that Warren's done really, really well from. I say Warren like it's my friend, but
Your bud Warren has done well for himself. That's an
he's done
understatement.
well for himself, in a circle of competence. But I think that. I would tend to agree. I think that most of what's most of what's out there is going, if not to zero, it's going to draw down significantly. I think that most teams will not deliver on, the.
But he said
everything
he said Bitcoin specifically.
Yeah, Bitcoin specifically. I would take the other side of that bet.
Yeah. With all this being said, though, like I approach my crypto investing with a Warren Buffett mentality. Like I'm gonna buy and hold for decades. Like I understand the tech. Like that's Warren's advice to people. It only invest in things that you understand.
Yeah,
And
absolutely.
I don't completely understand. I understand enough where I can see the vision of it playing out. If it does play out, where I'm willing to risk money and hold it long term.
Yeah, exactly.
Yeah.
And there's a lot of very, very sharp investors, from Silicon Valley who've taken the other side of that bet. Either investing in funds that are investing in crypto or that are holding positions directly. Peter Thiel, the contrarian he is, announced that a few years ago he'd bought up a significant amount of Bitcoin close to the bottom,
hundreds of millions of dollars worth. And Chamath Palihapitiya, am I saying that right?
The Warriors owner, right?
Yeah.
The guy who owns the Warriors.
Yeah.
I think it's I'm not even gonna try.
Chamath. I agree with your investment strategy, but he's been in it. He was one of the first to invest in Facebook, was their head of growth when they first came out. We don't really agree with Facebook at this company anymore, but
not that we don't agree with it. It's just it hurts what we do. It's a whatever. No, it hurts what we do, but I'm a big fan of let's use Facebook to build products. But we'll talk about that another time.
Yeah.
Being on Facebook's probably not good for you.
No. Long term, definitely not.
It's probably not good for you. But he, I remember a couple of years ago, he got up and he said, everybody should have 1%. Bitcoin, more if you're younger. Mm-hmm. And, I still think that that's true. And if you have a long enough time, and this is where, position sizing gets really interesting, where, if you have 1%, the thing could draw down 80%. But you don't actually lose all that much.
Yeah.
If you have 5%, it's the same thing. If you draw down 80%, you don't actually lose all that much. You can afford to keep investing and buying the dips and buying more. Mm-hmm. But if you're overexposed and you get wrecked, that's it's really, really tough to get back from that.
We don't want to be taking out second mortgages on our houses to get in this or anything like that. Invest what you can, and again, it's going to be an asymmetric return. You're either going to lose that investment or you're going to have a very, very, very lucrative investment.
Exactly. Proper sizing will give you, it's actually, I would say, more risky not to have 1 to 5% if you're a young person in Bitcoin, rather than the other way around. I think it'd be more risky to not have that kind of exposure at this point.
Exactly.
Agreed. If you're 20, 22, like Matt Brown is not here, I wish you should. It seems foolish to not have it. It seems like almost at a point where it's like, why would you not take that opportunity?
Yeah. The other side is true. If you're if you're sort of 70, 80% in, and you're already up so much, but you haven't taken anything off the table, then that's really scary. It's good to have some cash to buy those dips.
That's one thing I was happy to do last year, is get my initial investment off the table, just free rolling everything.
So what do you
everything
roll?
I free roll.
Yeah.
I'm free rolling too, but it's like the ETH run up in May of last year, like from 60 to 300, put me like I don't even want. It was. I couldn't believe how quickly that happened, and I was just like, okay, like this is. I guess I'm in this for life.
That's when
now.
we met. We met in May. Across the street here. It was. It's been last year was a crazy year.
Yeah.
But so I think what would be great advice right now is like so let's talk about let's speak to our demographic here. Let's be frank. It's probably most people working paycheck to paycheck, skimming for rent, stuff like that. How can they get exposure? What's the best strategy for them, do you think?
I think the best strategy for them, for most retail investors, it's dollar cost averaging. Buying a little bit every single week. There's no need to rush. There's no need to do it all at once. Just a little bit every single week. Setting aside a little. You know what's the amazing part about Bitcoin? Has turned every single young person I know into a saver. It's crazy. It's actually
that's what I always say. I'm
it's
like
insane.
Everyone like this office went from like buying gold bottles to like, how can we just save all our money?
That's
Like,
actually
like
a
literally,
very good
literally,
point.
it was like, let's go out to the club on Friday night, and now it's like, how can we like sit in and like eat cheese sandwiches and save our money? I'm like, it blows my mind.
I'm not gonna say any names. So we have a guy named Caleb who loves going out. He loves like going out to the club. Like, very fun guy. He reads more about like alts and Bitcoin and like how to like improve like his positions and like how to like grow his money. Like, he's so into this. And if you met him last year, like, you know, he wanted to go to One Oak on a Tuesday, and now he wants to like go home and like read about like some alts with like nobody even knows about. He's like, yeah, look at like the candlesticks and like the fucking parabolas. And it's like, Caleb, like, what are you talking about? So I mean, that we won't say his name though, but like it is, and he's, you know, 22, 23 years old. It's completely changed the way like young people have looked at savings and like money and like just all this stuff in general.
Yes. Let's touch on that. How did it change you?
How to change me?
It's definitely changed me.
I mean, I see that watch.
Oh, that's that did not need to be said. We
can cut that out.
It is a nice watch.
I mean, it's a nice watch.
So I think for me, it's you know, one, I hate sending money now. Outside of watches, I hate spending money. I try to save a lot of money. I try to, you know, it's totally changed. You know, I think the Bitcoin teaches you, it's time preference, essentially. It teaches you, you know, really, really reinforces when stuff, it's, you know, Warren Buffett, he says, you know, he tries to, you know, I know you hate him, but he tries to teach time preference over, you know, 30 years. And it's hard to, it's so abstract, you know, it's hard to try to visualize that, you know, try to visualize compounding. But when that, you know, when that shit happens in like 6 months, you're like, whoa, you know, whoa, this is totally different. I think for me personally, you know, I'm on my, you know, sort of like, I guess, individual path to what I see as sovereignty, you know, financial independence. You know, sort of like doing what I want to do in the world, which is, you know, continually learning more and sort of like serving all of my curiosities, working on whatever I want to work on.
That's an incredible point, and that's something I try to stress to people come to me like, what do I do? What do I do? What do I do? I'm like, this is a very personal decision. Like, you need to understand what you're getting into, and then understand the gravity of what this technology enables, and make a personal decision, make a plan, and figure it out yourself. I'm not here to hold your hand and do it for you. Like,
it's another thing is, you know, sort of, you know, if you're selling out of your Bitcoin, what are you going to go buy, right? Like, you're going to buy, you're going to go buy equities, buy the S&P 500, or you're going to buy, you know, it's everything sort of like, it seems, you know, it's been, you know, a while, you know, we're 9 years separated now from the last recession. You know, it seems like everything is frothy nowadays. If
the
you
VIX
look at,
is it at an all-time low right now? The VIX? The VIX has been
there's
very complacent
there's all these
recently.
volatility traders on Wall Street Journal, like from their home office. It's crazy, you know. So it's, I think, you know, for me personally, I you know, I don't feel comfortable buying any of that stuff. That's not, again, not financial advice. So, you know, real estate, hard assets, gold. You know, nobody can take your house away from you if you have the money to buy it. You know, or land.
And that's another thing I touch on is we were just born into this system, born into this, the way our world works, and you just start running. Like, you don't even, like, most people don't take a chance to take a step back, basically evaluate what's happened over the last 50 years and realize how much the internet and now Bitcoin is going to change us and our tendencies. And so again, you're born and you just start running. Things work this way, and that's what you're taught, and that's what you think, and you really don't challenge it. And that's why I got into Bitcoin, because it was a prescient thing for me. Like, I was a senior. I've told this story on this podcast before, but I was a senior in high school in the fall of 2008 in an economics class. And I was just like, how the fuck can this happen? And like went down this path and was like, oh my God, maybe the system that we were born into isn't the best system in the long run.
And the system's way better. It's a more meritocratic system, in my opinion. You know, we have, you know, it's not just in terms of access. It's, you know, whatever papers you want to read, the research you want to read, you know, if you want to read other people's opinions, if you want to go check out source code, it's all up there. You know, you can go, there's nothing that's stopping someone to go start contributing to Bitcoin D or the Lightning Network. You know, they're looking for developers. You know, shout out Lightning Network. Like, they're looking for devs right now. There's nothing that's stopping someone from going out and doing all these things. You know, consequently, you know, the other side of that is, you know, if you want to be an investor, you know, you don't need to call up, you know, Goldman Sachs and get your prime broker and, you know, be accredited and, you know, go get, you know, solicit funds from your LPs. You can trade alts. Soon we're going to be able to do it totally decentralized, via Atomic Swap or the decentralized exchanges that are coming out. And soon we'll have decentralized versions of derivatives and options, and that's going to be a game changer. It's really democratizing access and contribution to all this stuff. It's crazy.
And it is crazy. It's crazy specifically for us because we were born at this inflection point where it's like, all right, things are going to change drastically. Like the last big inflection point in human history was probably the printing press, and that destroyed the Catholic Church, which was the quasi-nation state of the time. And now
the transistor, maybe, like
transistor industrial. But I'm talking from like a destroying.
You don't think the internet?
No, I'm saying the internet's like.
Okay, you're including that. Okay.
The internet and Bitcoin, I would couple together.
Yeah.
Bitcoin's a layer of the internet, I would say.
Okay.
But like really destroying the hierarchical structure that runs the world. So from 1000 AD to 1500, that was the Catholic Church.
Yep.
Now from 1500 to 2000 and up to today is the nation state. But the internet and Bitcoin are starting to really butt heads with the nation state.
Exactly. One of the first things that we talked about when we met in Williamsburg Coffee Shop, I don't remember. Variety
on Graham Ave, one of my favorites. Coffee is crack. It's extra strong.
The one of the first things we talked about when we met was the sovereign individual thesis. Violence is, the basis of the nation state.
The logic of violence.
The logic of violence. And, I, sort of grew up, when I first read it a few years ago, shout out, I think Naval for turning me on to it. First read it, was, sort of blown away. It just blew my mind.
It predicted Bitcoin on page 25 in 1997.
Predicted Bitcoin, predicted mobile phones, predicted the internet, predicted
fake
populism
news.
and Trump. Yeah, exactly. No, everything. The, not a lot of people write about the future in a really sort of lucid, articulate way.
Such a prescient way.
Exactly. No, we're done stroking it now, but no, it was good. It's good. Everybody should go read it. And I think it's print only actually, which is dope too.
Yeah,
you actually have to like buy it and hold it. And one of the crazy things is sort of I wrote it off almost a little bit. I was like, this is cool, but sort of like way out there. And now it's like it feels like we're so much closer. I'm like, wow, like this is doesn't feel like it's that far out there anymore. Soon we're going to be able to, trade derivatives with whoever we want. We're already able to move money wherever we want. And that's sort of like, I think I see that as the first step. You have all these nation states that are, sort of pushing towards, hyper Bitcoinization. They're talking about holding Bitcoin reserves. They're talking about, setting up mining operations. And these are all rumors, but, some of them I hope, turn out to be true. And they're all actively threatened. We saw Mnuchin's comments today. Mm-hmm. They should be.
Yeah, they should be. And I'm happy you mentioned that. I got Papawasa coming in 2 weeks. The guy trying to convince Ghana to.
Who the fuck, Papawasa?
Papawasa. He blew up a couple.
He blew up on Twitter.
Yeah, he blew up on Twitter a couple weeks ago. He's trying to convince one of the central banks in Africa to buy 1% of their reserve assets in Bitcoin. So he's going to come give that case in a couple weeks.
And in 5 years, they'll be able to buy the whole continent.
Yeah. That's like the crazy thing. And again, that's what I talked about last week. I had Za on the podcast, who's from Zimbabwe. And what people in the States don't realize is, yes, we don't need this stuff right now. But if you go to Zimbabwe or other countries where hyperinflation has affected a country, like they need it, and this helps. This is a use case that is actually working now, and it's not helping everybody. It's not helping the whole country, but there are people within these countries that are using Bitcoin as sort of a safe haven.
Yeah, and it's fascinating with my parents too, because they're I'm from India. My parents are gold bugs. Indians love gold.
It's a very cultural thing over there.
Yep. They love gold. And so, watching now, when I first explained Bitcoin as sort of like uncensorable store of value, digital gold, they were like, oh, yeah, this is like super obvious. And so they got it pretty much instantly. And what's more interesting, and now, we've had, not just hyperinflation in sort of, Zimbabwe and a bunch of other countries. We've seen, even in India, my parents saw the demonetization scheme. They saw, people's money taken away. Now they're like, okay, cool. Like and it's exploding in countries like that. I think that there are so many speculators like Nate that are coming in. They're like, yo, let me get my quick buck.
I mean, I see the long-term value of it, but when you spend all day with Lewis, you kind of just get like excited. You're like, all right, let's go, and then like you have to be reminded, like, all right, chill, bro. But
we'll see this over and over again. People come to speculate. They see the value. Some of them will leave. Some of them will stay. Some of them will get wrecked. Then they'll leave. Some of them will stay. And, that's how these things tend to go, right? Carlota Perez has written a lot about this.
Yeah, I was one of the lucky ones to get wrecked and stay.
Yeah, exactly. I was lucky to get wrecked early on my different alt plays.
Yeah.
If you had to make one bold prediction for the year, like something that wouldn't shock you if it happened, but it's like a bold prediction, like where would you go?
Something that wouldn't shock me if it happened, but it would be...
like the way, I don't know, like if someone said last year like that in like one day, like Bitcoin would go from like 10K to like 19K, you'd be like, that probably won't happen. Like what would be like a big prediction for this year?
I think that it's very possible that Bitcoin could hit 50K.
Wow.
This year. I legitimately just, what I'm seeing, we're not, the first wave of institutional capital isn't even in yet. Pension funds, mutual funds, there's none of it's in. The one sort of black swan event that I'd worry about is regulation. If there was something serious that came out around that. But ultimately, when I take the long-term view on that, governments can't regulate this stuff. It's really, what are you going to do? A democracy can't regulate this stuff.
No, because the case for plausible deniability is so large in this space that like it is going to be, like you said, impossible to regulate.
Yeah, it's
just,
actually
just
really
from
funny.
plausible deniability alone.
This week, when South Korea, which is very, very democratic country, came out and they had two conflicting ministries that were both saying opposite things about Bitcoin, and they were both feuding with each other as a result of that. It's going to be really, really hard. I think that everybody, here in the U.S., the Treasury, the Federal Reserve, the SEC, a number of of sort of government functions are all looking at Bitcoin, but it's going to be very, very hard to do something about it, other than sort of close that fiat on ramp. But at some point, I do think it's going to be too late.
Yeah, I just actually just retweeted something about the Korea situation earlier today. The people, the Korean citizens, like, got so pissed off that the ministry did this. They started signing petitions. They had like two petitions with like 100,000 signees saying like, "Don't regulate this. Don't regulate it. How dare you like talk down the markets?" They were coming at the finance minister for manipulating markets.
Yeah, the finance minister wanted to buy the dip.
Yeah, exactly. Just like Jamie Dimon did earlier this year or last year. I kept saying this year. It's 2018. Mark.
2018,
Marty.
Bro.
All right, let's get a little bit more cosmic here. I was going through your Twitter, and I found a really good quote by Niccolo Machiavelli that you posted. "It's all courses of action are risky, so prudence is not avoiding danger, but calculating risk and acting decisively. Make mistakes of ambition and not mistakes of sloth. Develop the strength to do bold things, not the strength to suffer." I thought that was very, very intense quote. Like, so that I feel like that goes into the long-term view of investing in the space and basically creating another book, which I think everybody should read, sort of an anti-fragile mentality.
Absolutely. I think it's actually one of my favorites. I think that the view that I take is, we all have limited time in this universe. We should try to do something that matters, that leverages, our sort of best talents that we see. And, for everybody that's different. I'm fortunate to have worked in investing in the past. I'm an engineer by trade, found Bitcoin relatively early, found Ethereum relatively early. So I see my sort of way in this world right now is investing in what I see as core infrastructure that's needed for this space to gain mainstream adoption, whether that's mining, whether that's investing in the exchanges of the future, and so while in that process doing my best not to get wrecked. And so that's the view that I sort of take on it is we have limited time before hyper Bitcoinization, and so we've got to do everything we can to get there.
Exactly. And
when do you think it's coming?
It's actually July 22nd, 4:52 p.m. Eastern time.
That's the thing, nobody knows. But that's why you said earlier it's stupid not to get exposure.
It'll surprise everybody except for the people who were talking about it 4 years ago. It'll creep up on us just like this run-up did. We all thought it was going to happen, but it's happening, and we're still like, holy shit, I can't believe this is happening. Hyper Bitcoinization is going to be the same way.
If Papawasa is successful in convincing one African central bank to put 1% of their reserves into Bitcoin, that might be the first domino that falls that leads us to hyper Bitcoinization.
I think that we're talking about sort of the institutional investor arms race, where everybody is talking. Before the question was, what is Bitcoin? Should we have exposure to it? Now it's, what's your Bitcoin strategy? Mm-hmm. Right now with central banks, it's the question is, how do we regulate Bitcoin? How do we deal with cryptocurrencies? Soon it's going to be, what's our strategy? What are we going to do about this? Are we going to be welcoming, as a sort of call option into the nation states of the future? Or, are we going to try to shut this down and take the risk of this becoming very, very real?
Yeah, the one thing though is like the people that would try to shut it down are so technically incompetent that I don't even think that like anybody could describe how Bitcoin works, and I don't think they would get through their head. Like,
I don't want to sound like a conspiracy theorist here, but
we're into it. We're into it.
America is run by rich motherfuckers.
Oh, that's not a conspiracy.
That's not a conspiracy theory, but I think that we're going to get to the point very, very soon. Every rich motherfucker I know owns Bitcoin. It's going to get to the point where...
Besides Warren Buffett, who
does not own Bitcoin. He's going to be dead soon anyway. It's all good. Every rich dude owns Bitcoin. Everybody, imagine the lobbying dollars that the Bitcoin holder, the hodler crew can put up on Washington. Mm-hmm. I think that it's getting to get to a point where it's going to be like we're going to have like big Bitcoin. Shout out Neeraj from Coin Center, but he's going to be the face of Bitcoin.
The best memer in the game. Him and Dan Darkpill are the two best memers in the Bitcoin
Incredible.
game.
I think that Bitcoin in the U.S. at least, if the United States has the chance to become the epicenter of Bitcoin, and all these rich motherfuckers are hitting up Washington saying, like, there's no way you can regulate Bitcoin. I have 10% of my assets in Bitcoin, 15% of my assets in Bitcoin. Mm-hmm. That's going to be very significant.
I think that's definitely one angle, and that is definitely going to be significant. The other thing is just like the delegitimization of our government to an extent. Like you have Donald Trump as our fucking president right now. I feel like a lot of people are just throwing up their hands like, what the fuck is going on? Like,
if anything, though, one of his first executive orders was, let's take a firm stance against regulation. Mm-hmm. But I am waiting for the first Donald Trump tweet to mention Bitcoin. I think there's a small contingency of tweeters that are all trying to get it, trying to make it happen.
Yeah, Crypto Medici is trying to.
Yeah, and he's my boy. He's the man. You should have him on the pod.
I DM'd him. I haven't heard back. His DMs are probably.
I'll text him. We'll bring him on.
Yeah.
He's
in New York, right?
He's in New York. He's he's been trying to get that to catch on, but I think at some point we'll get a Donald Trump tweet that's sort of like, Bitcoin. What's Bitcoin?
Yeah.
And the U.S. is the number one winner of Bitcoin.
Bitcoin's going to be huge. It's going to be huge, and we're going to win.
We're going to win.
Yeah, it's so exciting. Like it's never a dull moment in this space. Like we were talking earlier, like Korea came out with this announcement this week. We got Lightning coming out right now. Alts are hot right now.
Everything's kicking up. I think that this is a dangerous time. This is a dangerous time to be an investor in the space, a new investor in the space, especially. It's so easy to be seduced by stuff that's not very good. Mm-hmm. In terms of the main projects, I think that they all have something, on the horizon that's pretty promising. I think that, the way I think about it is in sort of like privacy protocols and then tokens. You have on the privacy layer, Monero, Zcash, that are holding strong. There's a number of other smaller privacy tokens that are traded on other exchanges like Zcoin that are all working with different.
Verge just got proven to not be anonymous at all.
Verge? You mean Dogecoin Dark? I think it's Verge that was called Dogecoin Dark back in the day.
Was it?
Yeah. And then, dude, the power of the rebrand. The power of the rebrand and the John McAfee pump and dump. If you're listening to this podcast and you follow John McAfee on Twitter, be very, very careful of that man. I think that he's still wanted by like some South American government.
Belize. He murdered somebody in Belize.
He supposedly murdered someone in Belize. Like
he murdered somebody in Belize.
Yeah, and they took control of his like massive art collection.
Yeah, and pretty sure it's well documented that he's a meth head too. I'm pretty sure.
All alleged.
Still a fun guy to follow on Twitter. He's
definitely
hysterical.
fun. Oh,
Great
my God.
troll. But yeah, be very careful of that guy. So Verge ran up. He was tweeting about it incessantly. But you have, sort of the privacy tokens. Those are pretty interesting. The protocols, Ethereum, all of these protocols are going to suffer from scaling issues, just like Bitcoin's facing.
Mm-hmm.
Some of them already are. Ethereum, we saw what CryptoKitties did to the network.
Well, I get yelled at for Ethereum bashing too much, but let's talk about what happened this week. Like they're on Ethereum's blockchain. It's not orphan blocks; it's uncle blocks. But like the amount of nodes, the amount of nodes that were falling out of consensus on Ethereum went up precipitously because of CryptoKitties. It shot up the Geth client. Maybe this is something you can help me out with.
Sure.
So Ethereum people don't like when you talk about the Geth client and how much data it takes to run Geth. So right now it's around 900. No. It's around 600 gigs.
It's a large number. It's actually one of the things that's really funny about Geth is, and Ethereum. So I ran an Ethereum client for a little bit on AWS, and I fell out of consensus, and I was sort of like, not that far behind, the equivalent of maybe 20 minutes worth, and that was sort of like game over for me.
Yeah, that's what their blocks are coming every 15 seconds. Or
Yeah,
something?
no, it was a lot, and so I think that what we'll see very soon is that every blockchain that is sufficiently decentralized will suffer from scaling, and it's just especially if you have all these sort of computations that need to run on the network. I think we'll see that with Ethereum for sure. We already are to some extent, and a variety of off-chain solutions will be explored there as well. With Ethereum, yeah, exactly. There's a number of off-chain solutions that are being explored with Ethereum. That eventually one of my favorite Ethereum projects is around decentralized exchange protocol, 0x. I find decentralized exchanges to be super, super interesting. I think that they're going to be. Sort of the dominant way that we trade crypto assets in the future. If we all want to have sort of custody and security of our assets, why would we ever turn them over to a centralized exchange when we could just swap with each other? A lot of these apps that look to do something at scale, like 0x's protocol, like they're relying on a number of activities to happen off chain. And they'll use the chain as a settlement layer the same way that people are looking at Bitcoin. And so I think that that's another sort of innovation. I think that was the road was paved by Bitcoin. That's what people will never pay homage to. So privacy is interesting. Some of the protocols are interesting. There's a lot of scams out there, but a lot of good activity happening there. And some of the utility tokens are, I think interesting. There's sort of ideas I find interesting, but execution I don't think is quite right.
Yeah, let's talk about utility tokens for a little bit because I think putting a value behind them it just doesn't conceptually make sense to me. There's two things about utility tokens that don't make sense to me. Is like if the token increases in value, it becomes more expensive to use that token for the utility you're looking for to a certain extent. And two, the UX barrier that you create and that you put users through by having to go buy Bitcoin or Ethereum and then get this token and then use that token on the utility network. I feel like the barrier to entry and the UX of that doesn't make sense. It's not gonna be simple enough in the long run. The way I envision it is you're gonna be able to build things on top of Bitcoin, or you can use like on Lightning Network little amounts of Bitcoin as a utility token. Yeah. Am I wrong?
Yeah, no, I think that I think about it a little bit differently. Here's how I think about it. I think about it in, sort of like a Clayton Christensen disruption model. He's a Harvard Business School professor, writes a lot about innovation. And, the way that he describes new innovation, and you can couch this even in the context of something like Uber, is that, at first it's very limited in use case, and it's more expensive and more inconvenient to use. And people use it anyway because there's some sort of fundamental need there that they don't have satisfied elsewhere. And gradually, as more people use it and there's, sort of increased network effects that come out of it, then it becomes cheaper and cheaper and cheaper over time, at which point it's finally actually cheaper to use this sort of new innovation than it is to use some sort of like traditional, player. The model that I would think of in the context of, a utility token, I'm not saying that I think that this will actually happen, but this is, I think, the sort of theoretical framework a lot of people are working with. If you take, resource sharing in the context of storage, I'm putting up my storage, and there's a number of these storage sharing tokens, and I'm putting up my sort of idle storage that I'm not using, contributing it to this network. And at first it's going to be way more inconvenient and harder to use than AWS or Google Cloud Platform or Dropbox or a number of these other traditional centralized storage providers, and it's going to be potentially much slower and harder to work with because, with centralization you get speed. It's very, very convenient. You can pay in US dollars. But I might have some fundamental need to use these decentralized file storage protocols. For example, if something is, if I need something that's truly uncensorable, I might need to use it anyway, right? So if the Turkish Wikipedia is taken down and Filecoin puts it up, that's actually a legitimate use case. And gradually, as more and more sort of like what I'll call storage liquidity is contributed to the storage network, because more and more people are adding their storage because they know that they can get money for it, that increases the amount of storage and sort of slowly brings down the price to the point where finally centralized providers will contribute their storage and provide some sort of interface. So, you'll have a centralized way to interface with the decentralized protocol.
So this is where I get tripped up. Is like, yes, the price of storage falls, but the utility token increases in value, where it becomes more expensive to access that. And
right, but you'll still be paying in a fraction of the utility token, right? So where you might be paying, half a file token, you might be paying 0.1 file token. When the thing goes up 5x in price, it'll track with USD. And the holders of the utility token at the beginning that never spent it, if they're buying the token anticipating that they'll spend it in the future, they'll get significant benefits because they bought early. And if you're an investor and you bought the file storage token, because you think that people are going to use this decentralized file storage system, you'll get accrued benefits from it down the road. And that's what, when I say like value accrues back to the token, that's what I mean. Is that, the more people that use the file storage token, the more valuable the network becomes.
Yeah, the network effects drive that value.
Now, it remains to be seen whether decentralized file storage is technically feasible or will be able to be, executed upon.
What are the knocks on it?
It's just technically hard, man. Like we've had, decades of now, or call it a couple decades of distributed systems research that's gone into sort of examining how to do centralized services, right? And so now we're trying to do very, very advanced operations across these massive decentralized networks. Like, who knows if this stuff is possible? But if it is possible, and there's enough of a sort of initial demand for it, I think that bootstrapping some of these networks will be very, very interesting.
Yeah, that's why I'm extremely interested in Blockstack in particular, because Manib Ali and Ryan Shea have done extensive research into distributed networks and the whole. I mean, they're trying. If you don't know about Blockstack, they're basically trying to make the decentralized internet that was talked about in the last season of Silicon Valley happen to a certain extent.
It was actually it was eerily close, but it's funny. Blockstack is super interesting. I could build for example, a decentralized Twitter. And you could choose to store your data for my decentralized Twitter interface. You could store it on your personal computer or your external hard drive or Dropbox or somewhere else. Leave it internet connected, and it'll be accessed. And Nate here could code up a different client, for decentralized Twitter, and you could use his client. You could use my client. it's pretty interesting. I think that it'll be interesting to see the apps that come out of this. I think they also have a pretty interesting governance model where they're putting bounties. They're saying, hey, we want to see this app built in a decentralized way. The best person to build this app, we'll give them a reward of some sort.
Yeah, they did that with a bunch of portfolio tracking apps.
Yep. I hacked on it for a little bit. It was pretty interesting just to try out the platform.
How is it developing on top of Blockstack?
It's cool. I mean, it's actually just like developing any sort of web application.
Yeah, they're interacting with Node.js, right?
Yeah. I used their JavaScript library, and it was you just sort of call blockstack.get whatever, and you can access the data that you have in your decentralized Dropbox storage, and it was cool. It was very, very, very cool. I was pretty impressed. Manib and Ryan are both blow me away, with how smart they are.
Yeah, they're OGs, and for those of you that don't know, Manib and Ryan, the founders of Blockstack, they actually worked on an altcoin before Blockstack Namecoin, and they were two of the first to learn about the limitations of these blockchains, specifically around proof of work and SHA-256 algorithms specifically.
Yeah, so I think that Blockstack is very interesting. They finally launched a token sale, after sort of long awaited.
We couldn't participate here in New York State.
And they have some of the best venture investors in the world. I think that I would bucket them along with what I see as the protocol coins, where they're trying to create some sort of new paradigm for building applications. And I think that ultimately most of the next generation of applications that come out and get sort of mainstream adoption, especially with a lot of the issues that we're seeing around Facebook and Google and some of these large companies around data and how much data we give them. I think that most of those will be decentralized, or at least decentralized in some form. They might be optionally decentralized.
So let's dive into this. How would a structure like Blockstack differ from Facebook? So right now, Facebook, Google, they hold all of our data. We are products.
Yes. If you're not paying for the product, you are the product, right?
Yeah.
In the case of Facebook, you are using the product. You are the product. They take all of you. It's actually super creepy. Sometimes I'm just talking out loud.
Yes.
And Facebook has denied this a bunch of times.
Spotify does it, I'm certain.
I'm 100% sure that both Facebook and Spotify do this.